The volume of tokenized Treasury Bills has grown by 600% in 2023. What this indicates, alongside a few more points of evidence I'll present later, that tokenization of real-world assets is becoming a major crypto trend. However, it is still worth asking, is it a long-term sustainable trend, or is it just a fad that will pass in a year or two? In this video, I present 6 systematic reasons to believe that tokenization is here to stay and you can bet on it becoming big in the next 5 to 10 years. Dear viewers, my name is Boris, I'm co-founder at Stobox, and in the last 5 years I worked on hundreds of tokenization cases across a range of industries, asset classes across all 5 continents, within fundraising targets from $100,000 to $1 billion. On this channel, I'm sharing learnings and observations from my journey toward disrupting capital markets. Let's get started. First of all, in the case you lived under the rock, what is tokenization of real-world assets? This is the process of transforming ownership and operations with real-world assets onto blockchain. What it entails is creation of a cryptographic token that represents, let's say, an equity ownership in the company, a debt certificate, and ownership in the piece of real estate and other kinds of assets. The benefits of tokenization are numerous, and I discuss them in detail in other videos that I encourage you to watch if you are new to the topic. First of all, let's recap what happened to tokenization in 2023. The first point, as mentioned previously, is high focus on tokenized treasuries and other fixed yield instruments. Only the tokenized treasuries part has grown by 600% in 2023. As a result of these trends, tokenization is among top 10 DeFi sectors by total value locked, according to DeFiLama. This figure, by the way, doesn't account for tokenization that is happening outside of decentralized finance protocol, and therefore the overall volume is even larger. Notice that this isn't merely capitalization of utility tokens issued by RWA projects. This is specifically the volume of real-world assets that have been tokenized, transferred to blockchain and locked in various DeFi protocols. So this is real assets being represented on blockchain and real industry volume. This growth led to widespread recognition of tokenization as a major crypto trend in the coming years by all major industry reports. Note that this recognition acts as a self-fulfilling prophecy because expectation of further growth leads to more capital and more people going into RWA projects, which provides them the leverage necessary to make those expectations a reality. This growth, however, isn't fueled by crypto industry alone, but also by participation of traditional financial institutions, some of the world's largest ones. The most prominent examples of this are BlackRock and KKR, who launched tokenized funds. But there is more beneath the surface. For example, a tokenization company's currency has been acquired by DTCC, which is the world's largest securities depository processing most securities transactions in the United States. This acquisition indicates their interest into digitizing their current operations and moving into tokenization space. In the last few years, there were only few investment banks such as HSBC, Societe Generale and JP Morgan who moved into tokenization. However, now, based on my private discussions, almost all banks want to come in, acquire tokenization platform and start offering the tokenization services or tokenized products to their investors. Therefore, there is huge institutional interest adding credibility to this narrative. This is what happened last year. Now let's discuss why we should expect it to grow massively over the next 5 to 10 years. The reason number one is a high interest rate environment. It's not coincidence that industry growth has coincided with a rapid and significant increase in interest rates. There are two mechanisms through which high interest rates support the growth of the sector. The first mechanism is that because of high interest rates, there is less liquidity available to propel the growth of highly speculative but promising projects. Because of this reduced expectation, there is less incentive to invest in volatile crypto assets compared to stable and cash-generating real-world assets. The second mechanism is that real-world assets actually include many forms of debt, which is currently offering higher yields compared to other types of investments. The second reason to bet on the industry is just the sheer volume of assets to be tokenized. We're speaking about almost $250 billion worth of assets that can be transferred on-chain. Therefore, even very mild penetration of tokenization is sufficient to massively increase capitalization of crypto market. The reason number 3 is regulation, and specifically application of regulation to decentralized finance. Because of regulation, many current money-making opportunities in DeFi, such as yield farming, staking, etc., will likely become inaccessible to many investors. And those that will remain accessible will likely offer lower yields because of increased overhead and compliance spending. This will further drive reallocation of capital from these opportunities towards real-world assets. The reason number 4, paradoxically, is an increased capitalization of crypto markets. This increased market cap leads to reduced volatility and reduced further upside potential, because higher Bitcoin market cap is, more liquidity is necessary to make it even higher, and therefore lower expectation for its future returns. Therefore, as returns on crypto assets become less attractive, there will be reallocation of capital into other types of assets, including other types of crypto assets, including tokenized real-world assets. Reason number 5 is institutional adoption, which I mentioned previously. Notice that financial institutions command huge volumes of assets, and therefore if they decide to commit to tokenization, which they seem to have done, the market can go from dozens of billions to trillions in just a matter of a year or two. The economy has rarely seen so large and rapid transition, and therefore the impact on financial industry and crypto market is going to be significant. The last reason is second and third order effects. As for any asset class, the trading volume and the volume of derivatives on said assets is often orders of magnitude higher than the volume of the asset itself. As more and more assets are moving on-chain, we will see an ecosystem of new applications and interactions to emerge. This includes lending collateralized with real-world assets. This includes indices and funds and liquidity pools with 2 tokenized assets, and many more things we are yet to imagine. As a result, each dollar of assets moved on-chain creates $5 or $10 of potential value. If these 6 reasons persuaded you, you're probably asking, okay, but what should I do about this, and how do I personally benefit from the growth of this amazing industry? Here are briefly 4 ideas. 1. You can account for this in your portfolio allocation decisions, in how you build your investment portfolio. Secondly, you can tokenize assets that you have to participate in this ecosystem. Thirdly, you can start a tokenization company yourself to participate in the creation of this new financial system. And lastly, you can at least read about this, subscribe to us to stay updated and see what new opportunities emerge as industry growth. If you want to tokenize assets or create your own tokenization company, at Stobox we can provide you with everything you'd need for that, including a technology, a token protocol, a DEX for trading, consulting and legal services, and the network of our marketing partners. So if you're interested, feel free to fill in the form on our website stobox.io or contact me by email at bp@stobox.io. We are also accepting subscriptions from equity investors, so feel free to reach out if you're interested. In any case, thank you for watching until the end, and see you in the next episode.